It's time for Smart Charts with Abigail Doolittle, where we look at timely topics with the street's top technicians. And Abigail, the S&P 500 crossing above 3,000 earlier today for the first time. So what do the charts tell us about whether this breakout is for real?
Great question, Joe, and we'll be tackling that here with Steve Suttmeier of Bank of America Merrill Lynch. Steve, great to have you here. And you have been bullish all year, so you believe that this breakout is for real.
Yes, I do. I do believe it's for real, Abigail, and we have the chart to show you. Basically, we've been looking for 3,000 for quite some time, throughout the year, and even 2017, we were saying, hey, we could hit 3,000 in the next 2 years. Happened a little bit later than that, though. But bottom line is, though, what we see here are similarities to past periods: 2012, 1998, 2016. So I think it's sustainable. We tested this level multiple times, and now we're pushing through it. So near term, I mean, as long as we can hold back and hold 2950, I think we can see upside 3160, 3180, but maybe even towards 3500 longer term. One thing that keeps us quite positive is there's a potential pain traded higher signal from monthly MACD.
Interesting.
In July, and that's what this chart's talking about.
Okay.
So we had a 20% drawdown on long-term capital management, if you recall, in 1998.
Yep.
And then you had a MACD buy signal in December of 98. Market rallied into 2000. Pretty good rally after that. You also had another signal in February 2012, where this was all about the correction after Greece and Europe. And you generated a buy signal after a short-term sell signal, monthly MACD, market rally for several years. And same thing happened right after Donald Trump got elected president in 2016. Monthly MACD went back to bullish after being on a sell signal for a little bit over a year. And here we stand now, July. Yes, July's not over yet, but think about this. I mean, if we can hold close to the highs here for the month, we could actually get a July monthly MACD buy signal that would suggest the pain trade is higher for the S&P.
Well, that's certainly a pretty compelling chart, especially since it's monthly. Now, one area that's been a little bit tough, though, utilities underperforming. Although I should say over the last 6 months to 12 months, they've been outperforming, but over the longer term, the underperformance.
So what we have here is a relative chart of utilities versus the S&P 500. So when this is trending lower, suggests that the utilities are underperforming. When it's trending higher, suggests that utilities are outperforming. So the bottom chart shows the 10-year note yield. So you can see that yields have generally been sideways to lower. Utilities actually have been falling in that environment. But you can see when you get the moves down in yield, such as right here, utilities tend to outperform. You also had that right over here as well, but you do it in the context of that downtrend. Now, what's very interesting right here, right now, is that, wow, 10-year note yields cracked their 200-week moving average. Utilities did not go to a new high above its relative 200-week moving average, and that's telling us something that, the rates lower trade is not really impacting the sectors the way one would expect.
But one sector that you think it could impact to the upside, the financials. Talk to us about this chart.
So we just had the utilities chart on here. This is basically flipping that chart upside down. So financials in 2011, remember, interest rates bottomed out around 1.5, 1.3 in 2012. They bottomed out around the same level in 2016. And here we are, roughly around 2. So when you think about the way financials are set up here, new lows for yields in this period and that period did not lead to lower lows on financials. And then financials rallied sharply in the back half of 2016 and back half of 2012 into 13. We think the trade is similar right here. So it almost suggests to us that we should actually be contrarian bullish on financials relative to the S&P and contrarian bearish on utilities relative to the S&P based on what we're looking at on these charts.